Good evening, good afternoon, good morning, wherever you're watching or listening to us from. Today, the 3rd of February 2025, you're welcome to Stock Team, the Investors Channel. We are happy to have you here. Before we go ahead, just a disclaimer, every information shared on this channel is for education purpose only. Please consult your financial advisor or do your due diligence before making any decision. And on that note, we thank everyone. If you haven't subscribed to this channel, please subscribe, put on your notification bell so that you don't miss our update for tomorrow, next tomorrow, and every other day. The market is fully open, so we thank everyone who have been subscribing, following us on X as well. Please follow us on X if you haven't done that at Stock Team Live, as you can see the handle, and we share all the breaking news about the markets, the earnings report, earnings alerts, a whole lot of analysis. Also, we share them on our X channel, XX handle. Today we'll be discussing a very hot topic which is trending in the global financial markets as of today. As a matter of fact, as at last week Friday, we had the news that President Trump, the new president, for his second term, who is now in the office for a second term in the US, he actually announced about three batches of tariffs against Canada, Mexico, and China. About 20% for Canada, about 10% for Mexico. Actually 20% each for both Canada and Mexico, and about 10% for China. Indirectly, the tariff on Mexico is an indirect tariff on China as well, because a whole lot of companies who couldn't access the American markets, especially during the first tenure of President Trump, they actually moved a whole lot of manufacturing capacity to Mexico, and they truck those products into the US, and those imports actually look like they are from Mexico, but they are actually Chinese companies who are actually trying to nearshoring very close to the US. So that tariff on Canada, Mexico, and as well China has really roiled the market. The market really went on a downward spiral. As a matter of fact, as early as 4 a.m. GMT plus 1 UK time this morning, the market went very negative when Wall Street opened in the early hours of the morning in the US, especially in New York time. The market went as low as almost 4%. Nasdaq was down by more than 3%. The S&P 500, everything went on a negative downward spiral. So what we want to discuss today: what is the importance, significance, consequence of this tariff, the Trump tariff, on your portfolio? And as well, we'll be talking about Palantir, that will be releasing their results. One of the major companies that we picked on this channel. Palantir will be releasing their results after the closing bell, so we'll come to that. But firstly, if you haven't subscribed to our channel, please subscribe, put on your notification bell so that you don't miss any updates. Now, coming to what exactly is the importance of the Trump tariff on the markets, on your portfolio, on your investments, especially on your strategy for this year. We are going to actually have a live demo, just like we usually do, so that we together look at how this is going to affect the markets. Where do you actually stand, and what should you be doing? What are the stocks that are likely going to be seriously affected, directly or indirectly? And what are the stocks on the other side of things? What are the companies or stocks that are likely to actually benefit positively? However, let's start from the not too good side of things, which is the negative consequences of Trump tariff. Before we move ahead, the market has now recovered a huge chunk of those losses, but some sectors and some specific companies are still very much in the red. If you look at Apple, ticker symbol AAPL, I'm bringing that chart up now, and you will see actually how this tariff on China, most especially China, has really affected Apple's stock price. You can see Apple is down by a significant amount of close to about 4%. As a matter of fact, it was actually more negative, but things seems to have been stabilized now. But almost 4% shaved off Apple's market cap is a huge chunk of market cap or value that the stock has lost today. Now, coming to Apple, because Apple is one of the Magnificent Seven stocks on Wall Street, is also one of our Stocker Team's Magnificent Seven stocks that we have for this year. Apple is going to be affected because a huge chunk of Apple's market is still very much in China. As a matter of fact, close to about 30% is in China, or even a bit more than that. But in the last 3 years, Apple really has been losing market share in China. From number 1 in China, Apple moved to number 2, and the stock, the performance of Apple sales year on year in the last 2-3 years in China has really been on a downward spiral. Yes, Apple still sells a lot of devices in China, but the fact that the US continues to escalate and perhaps to de-escalate things with China in the short to the medium term, Apple is likely to actually feel some pains on its stock price. However, here is the silver lining: Apple is likely to actually benefit should the US and the Chinese authorities, especially President Xi Jinping, meet as soon as possible. President Trump said President Xi Jinping of China gave him a call after he was sworn in, and that is a good sign. And I also believe that President Trump's strategy of escalating to de-escalate might actually be an approach to have some leverage when actually negotiating any trade deal or any rollback of this tariff with China. The second stock we are going to be talking about is Amazon. Amazon is also part of the Magnificent Seven on Wall Street and also for Stocker Team as well. And you can see that Amazon seems to have recovered the huge drop in the stock price when the market opened rather. Why? Because on the negative side of things, Amazon makes a lot of things in China. As a matter of fact, a lot of the merchandise, a lot of the products and services that Amazon sells across the world are still very much manufactured in China. And as a result of that, the tariff, 10% tariff, will actually increase prices on Amazon. And the disadvantage for that is that Amazon is likely less to see a huge or a significant drop in its gross merchandise value, which is the total amount of goods and services that Amazon actually sells. And Amazon's marketplace is actually bigger than Amazon having those products directly. So a whole lot of the Chinese merchants are actually directly affected by this tariff until either this tariff is cancelled or negotiated further downward. I believe that this tariff could actually be cancelled, especially if President Trump and President Xi Jinping have a very good outing, a very good negotiation. Actually, on the flip side of things, positive side for Amazon, if you look at what the US has also done to the likes of Temu and all of the smaller and very high growth Chinese e-commerce companies that are selling products into America, into the US, there's also been an executive order that the US government has signed that will prevent the likes of Temu, the likes of all of these very, very popular Chinese e-commerce companies from importing or sending parcels or sending things that Americans have bought without paying anything in taxes or anything that the government gains from it. So there is a loophole that the likes of Temu have actually been using to actually ship things to the US. Any product under $800, Americans don't necessarily have to pay any import duties or anything, or the company paying any tariff or anything like that. But President Trump has actually cancelled that. The advantage for that is that all of those sales, all of those products might actually find their way to Amazon, even when some of these products have been, suspected to be knockoffs or low quality products. But that's supposed to actually benefit Amazon. So despite the fact that Amazon will be losing a whole lot of Chinese sales, or a whole lot of Chinese products will get more expensive on Amazon, Amazon will also be benefiting, because the fact that the likes of Temu and all of the Chinese e-commerce companies will no longer be able to ship things to the US free of charge without paying anything, or the person receiving it paying anything. So those are two of the major mega cap companies, mega cap stocks that will actually be affected by this tariff, Trump tariff. What do you think? Do you think you want to still have these stocks in your portfolio? For me, I believe Apple has no replacement. Apple is still going to do very well this year. If you look at, let's go back to the chart of Apple so we can actually put things into more perspective. So if we go back to the 1 year chart of Apple, we're actually going to see where Apple is coming from and what this company might actually witness in the next couple of 6 months or 12 months down the line. Apple is still up 20% in the last 1 year. Year to date, if we look at Apple, Apple has just been down fractionally, not necessarily fractionally, it's still a huge drop, but Apple had a lot of negative news, a lot of bearish sentiment. Number one, the drop in sales in China, a whole lot of the challenges that Apple has been facing. Apple hasn't necessarily pushed out something that has really, shaken the market to the core. So yes, this might be an opportunity for Apple to actually surprise the market by perhaps rejigging the iPhone model, or in terms of the design, in terms of the size, and also Apple having the opportunity to invest in content, just like we said the other time, that Apple has what it takes to actually compete very well in the content and the services side of things. Apple's business is now very much more diversified beyond iPhones. As a matter of fact, the best side of the business is still the subscription, the App Store, the Apple services, digital services that Apple has. That's the bright side for Apple, and that's what we think that is the silver lining for Apple. Now, before we close, we said we'll be talking about Palantir. So this company is a company that has done very, very well in the last. I'm going to go back to actually pull up the chart for Palantir. In the last 1 year, this company has done exceptionally well to investors, to shareholders, to the company owners themselves. In the last 1 year, Palantir has done almost 400%. In the last period, throughout the period since 2021 that this company has been quoted on the stock market, it has done well over 800%, which is quite impressive. Yes, a caveat: Palantir is a very, very expensive stock. The forward PE ratio, which is what you're actually paying for future earnings, is well over 200. Well over 420, which is quite very, very significant, and the highest in the entire ecosystem that Palantir actually plays. So when a stock is that very much valued, what it means is that yes, is the stock is valued way higher than its peers in the industry that it competes. But it means that the market actually expects that the company will actually continue to grow or continue to show better earnings on both the top and the bottom line in the nearest future. So even when a company is overvalued, or the valuation is way higher than what you can actually expect in the industry where it plays, sometimes the company doesn't necessarily drop in value, or the company doesn't necessarily start tanking. If the company continues to match up with the expectation of the market, as a matter of fact, market cap, the P ratio, oftentimes will never actually tell you the old story. So one thing that you should actually watch and keep an eye for is the SAR, which is the share action rights, as opposed to stock-based compensation, which Palantir has done for the past few years. Stock-based compensation is when the company actually compensates his executives, his talents, his engineers by giving them shares, which dilutes the shares, and the stock will actually pull back, because what you have as a shareholder is worth less than what the market will price it to be before those shares were issued to those employees. But share action rights, rather, SAR, is when the company doesn't necessarily issue new shares, but the company will actually compensate those employees based on the performance of the stock. So if the period when the stock when the share right action was given to those employees was perhaps maybe when the stock was around $40 or $50 per share, if the stock is now $80 something, if that was the agreed price that they will get compensated, the company will actually give them cash value of those stock, or actually use part of his net income to actually buy the shares. So what happens is that the expectation of the profit that the company might actually declare might be a bit lesser. So those are the things that you might actually need to watch out for in terms of the result. But year on year, Palantir has been declaring well over 30% year-on-year growth on the commercial side of things. As a matter of fact, the government side of things, over 40%. The company is also executing across verticals. The company is investing in a whole lot of other sectors that is actually making the business to actually grow beyond defense, beyond the financial services industry. Palantir is now more or less powering more than 30% of the SL sector in the US. As a matter of fact, one of the biggest hospital, Cleveland Clinic, actually demoed the AI platform they built with Palantir and how it has really helped the company. So Palantir will be releasing the results after the closing bell. I believe the company will outperform. I believe with a whole lot of activities, with a whole lot of result-driven sales that the company has done in the last 4 months down the line before the new year, I believe this company will actually outperform. So expect Palantir to outperform. The SAR is what you should look out for. On that note, thank you so much for watching. If you haven't subscribed to our channel, please subscribe. Put on your notification bell so that you don't miss any update. I'm also going to invite you to join us on X. This is our X community. The handle is at Stockerteam Live. Please subscribe. Join us on that community. We really appreciate everything. We appreciate your support. We appreciate your feedback. Please keep on dropping your feedback directly or indirectly. We appreciate you. Till tomorrow, keep investing, keep growing. Thank you.